The World Economic Forum recommends distributed ledger technology to restart supply chains. We ask, are stablecoins good or bad for the future value of Ethereum and its sales pitch? And Dforce has returned about $25 million to those customers post-hack. Plus, the latest in price analysis. Stay tuned for Breaking Bitcoin.
Hi, my name is Jude Nelson. I'm an engineering partner at Blockstack, and you're watching Breaking Bitcoin.
Welcome back to Breaking Bitcoin. We are live every day at 12 p.m. Central Standard Time. This is your daily source for everything cryptocurrency, markets, and finance. I'm your host, Justin Wise, lead analyst at crackingcryptocurrency.com. Hopefully you guys are doing fantastic today, wherever you happen to be watching us, wherever you happen to be tuning in from. We've got a fantastic show for you today. Before we begin, there has never been a better time to join our community and start building your own trading system. You can take advantage of our proprietary indicators, suites like Minx and Time Transformation, our community mentoring sessions, our premium trading signals, and our suite of educational material and concepts and courses. For more information, click the link in the description down below or point your browser over to premium.crackingcryptocurrency.com. That's premium.crackingcryptocurrency.com. Like I said, we've got a fantastic show for you guys today. The first thing that I want to talk about, the 4-week Bitcoin trading competition that we ran on ByBit is now concluded. So big shout out to some of the top winners. I tweeted them out on Twitter earlier and announced them in the Discord, but let's just go ahead and give them a shout out right here. So I want to give a big shout out to Roycoin in first place, locking it down, finishing the competition plus 40.31% total P&L. Rhino Trader 247 in second place, 32.6%. Crypto Sophie 18.22%. GTYHG at 9.42%. And in fifth place, Nemic for Life at 8.82%. So congratulations, guys. Thank you to all 36 of you who came out for the trading competition and participated. Hopefully we'll get to run another one here in a while. They're very fun when we get to do these things. Thank you guys so much for participating in the communication channel for that as well. So that was a lot of fun, and I'm always happy to do that. I'll be seeing if I can do something special for you guys coming up here pretty soon. Second big announcement, this is for premium members. As you guys will see, if you go look in the premium Discord, we have added a new channel to our analysis and signals category. And this is the Cybot. So this is the first of the automated strategies that we're going to be rolling out. Right now, there are about 8 different trading conditions that will go into Cybot. The first one is just there right now. So it is running. The strategy tester is very good for it. The back testing and forward testing results for it are very good. So we'll be posting signals for that very soon. It's running on the Meso timeframes, and it is designed for the Bitcoin market, right? Now it is monitoring the XBT-USD chart on BitMEX for trade signal generation. However, we've tested it. You can utilize it on ByBit. You can utilize it on Spot Exchange. You can kind of utilize it wherever you want, but it's there to capture the majority and the meat of the trending movements to the upside. Not a reversal system. It is a trend following system on the Meso timeframes, clocking in at very good results. My goal here over the next month is to have about 5 different markets covered, all of the Binance BTC markets, all of the Binance USDT markets, the BNB markets, as well as the ByBit and BitMEX pairs. And then if we want, if there's any requests for additional markets like FTX might be one, or any of those other markets, we'll add those in as demand recommends. Obviously, the next step from this would be API trading, but we'll get into all that later. So first rollout for you guys. Hopefully you guys enjoy it. Please let me know if you have any feedback, suggestions, or comments. All of the information for the recommended trading strategy is in that channel and will be posted with each individual signal the way that we currently do with each individual signal anyways. Looking forward to tomorrow's community mentoring session. We're going to be taking a deeper dive into stocks and answering questions. If you're a premium member and you haven't gotten an invitation, make sure to email the support desk so that you do get that invitation. With that being said, we've got a lot to break down today, and then I want to get into the price. So the first thing we're going to be talking about today is this new report from the World Economic Forum and their attempt to get supply chains restarted back up. So we have to kind of take a look into this and see overall, is this good? This is not really reflective on its effect on Bitcoin's price or any digital assets price or economic price. However, if we kind of look in the macro at how this affects internation commerce, internation trade, and the overall philosophy, not I don't want to say philosophy, but the overall sentiment of the international market and this global marketplace that we've created, anything that facilitates goodwill and positive commerce and freedom in that free market exchange is typically good for asset prices and overall good for economic and the living conditions of individual citizens of those nations. So pretty bullish on anything that improves trade and commerce, because anything that removes friction removes the ability for corruption, malfeasance, manipulation, and that makes more capital available to be deployed toward legitimate purposes, right? Because right now there's a lot of friction in the system, and this is one of the biggest indictments against the banking structure in general, is that there's too much friction in the system. There's too much friction that requires centralized command and control style implementation, and therefore there are lots of little pockets of middlemaning, right? Lots of different little pockets, and the more middlemen you add into a system, every single middleman is going to take a little chunk out for themselves, a little slice of the pie out for themselves, right? And we can see this. This is how it's worked throughout all systems. You go back and look at the economy of Rome, where they basically privatized, right? They privatized this, independent military force of, well, not private military force. There was the Roman legion, but when the Romans would conquer a nation, they would basically auction off the right to tax that land, collect their piece, and it was up to whoever held the taxation rights of that land to go out and get the taxes from the individual citizens. So they basically privatized tax collection, which was pretty interesting. And of course, right, every route along the way where there's middlemen, you're going to have more malfeasance, more corruption, and more inefficiency overall. Like, more inefficiency is the overall result. And something like DLT or blockchain technology, particularly as it's envisioned with a decentralized currency like Bitcoin, removes those friction points, removes those points of pain, and makes capital travel more liquidly, and opens up the ability for nations to trade more freely. In addition to that, what's great about Bitcoin is it also allows self-sovereignty, for you to be for you to be your own bank, for you to have unconfiscatable currency, and to know with certainty that your funds belong to you and cannot be taken from you unless somebody hits you with a hammer, which, there's not a whole lot that we can do to change that until we're living in an altered carbon futuristic world. But you can see it doesn't really work out there all the time. There's always individual nuances. But if you guys are new to the channel, make sure to like, share, and subscribe. We highly appreciate that. And leave a comment down below if you have any questions, comments, concerns, sarcastic remarks, and or death threats. Let's get started with the show, guys. The first thing that I want to talk about. All right, here's the competition update. But the first thing that I want to talk about today is the World Economic Forum looking to blockchain to restart the global economy. This is the article. So in a new report from the World Economic Forum, deployment of blockchain-based solutions can potentially address the supply chain inefficiencies and failures that have been exposed by the COVID-19 pandemic. Of course, nations across the world are suffering and struggling with the supply chain. Along with this report, the WEF has also released a so-called blockchain deployment toolkit aimed at governments and businesses to take advantage of in order to adapt their supply chains to the current economic situation, i.e. negative situation, as well as boosting the post-COVID economic rebound, right? To try to accelerate the economic recovery following normality, right? And now this report, together with a toolkit, was published today, and it contends that the well-being of both the private and public supply chains are under duress in the midst of our current situation. So here's the toolkit right here. Now, this report cites how supply chains from industries, from pharmaceuticals, medical supplies, and food systems have been hit the hardest in recent months, and they're causing the biggest struggle in nations kind of recovering from this. Now, arguing that the efficiency of supply chains depends on transparency, DLT, or distributed ledger technology, is capable of creating a, quote, shared truth, end quote, among the supply chain stakeholders. Now, for those of you who don't know, the World Economic Forum is a Switzerland-based NGO. It was founded in 1971 with the aim of engaging leaders from the world of business, academia, and politics on major economic issues. So basically everything that we hate, with the purpose of advancing the global economy. In order to assist business and government organizations in getting up to speed on blockchain-based solutions, they have launched this blockchain development toolkit, which, in their words, is designed to maximize the benefits and mitigate the risks associated with deploying distributed ledger technology for purposes, right? Now, this toolkit was under development for, it was developed for about a year, over a year actually, and it saw contributions from over 100 public and private firms from over 50 countries, including Deloitte, Maersk Shipping, the World Bank, the World Food Program, et cetera, and many, many others. Now, Nadia Hewitt, who actually heads up the blockchain and digital currency division at the World Economic Forum in the United States of America, said that this toolkit is going to be helpful in bootstrapping blockchain solutions for those who want to take advantage of it, particularly, and I think this is really what they're aiming at, smaller players who lack, smaller countries or companies who lack significant resources to generate positive development in the realm of DLT, right? Now, this DLT toolkit has already been deployed in the field for a variety of pilot projects, including those with Saudi Aramco, Hitachi, several small to medium-sized businesses in addition to that, but obviously with the Aramco and Hitachi being the biggest one. Now, ambitious blockchain programs are being spearheaded by major companies in recent months, right? We've been covering this quite a lot, suggesting that industries across the board are waking up to the benefits that DLT, regardless of any kind of cryptocurrency or native token, but just that DLT can offer, right? An increasing number of major companies and institutions have created ambitious programs recently to deploy blockchain and blockchain solutions across their supply chains in recent months, right? Now, according to Kwale Hoon, who is an executive from Singapore's Maritime and Port Authority, they are seeing an accelerated trend of adoption of not only blockchain, but other DLTs, digital technologies, and that it has improved productivity and efficiency and their shipping sector dramatically. Probably one of the biggest things. Anytime anything's being transported, DLT can help with that, right? Adding that blockchain has great potential in the realms of loading, tracking, and internation trade. Another example of a country embracing DLT is the United Arab Emirates, which is approaching its deadline for the completion of their Emiratis Blockchain Strategy 2021, a program with the goal of migrating 50% of governmental transactions onto DLT-based platforms. Now, Rupert Colchester, he's the head of blockchain technology at IBM in Australia, stated that many businesses, are now implementing DLT solutions, particularly across their supply chains, in response to a greater industry demand for transparency, which you'll see here in a second is kind of my whole tack with this entire topic, right? Another example of industry adoption came from earlier this month when the Iowa-based egg producer Farmers Henhouse, right? I read about that in the paper, had begun printing QR codes on their cartons to allow consumers to trace the origin of their produce, right? With global supply chains, global supply chains are right now, they're in a lot of trouble. And it seems that the adoption of DLT technology across major industries is going to be seriously accelerated in the coming months and years. It's already begun ramping up. It is apparent that blockchain technology and DLT systems improve supply chains, and they foster greater trade in a world where tensions are being strained by the coronavirus pandemic. And the question we have to ask is, in that type of society, how can you foster a free market spirit and incentivize fair play and encourage nations to continue trading and improve trading to remove friction, right? It seems that the answer is by incorporating these transparent DLT systems to help foster that trust and honesty in these networks, right? These networks of trade and commerce. Now, personally, I view this development as a good thing. The more of this technology that we see being utilized in traditional B2B or intra-business applications, the less opportunities for manipulation or foul play exist. The less friction points, the less middlemen can possibly exist, right? Now, this is an example of kind of a cliche, like blockchain, not Bitcoin, right? But the adoption of blockchain, not Bitcoin, in this case, is a positive movement for trade becoming more efficient and for fostering, in my opinion, a more egalitarian mode of commerce, right? Something that keeps the wheels turning across the nation, which, by the way, sets up a greater world where the adoption of something like Bitcoin makes more sense. If we add into that again, the adoption of a hard money in the form of Bitcoin, we are moving towards a better world, certainly. But what do you guys think, right? Are these great leaps forward? Or are these the initial webs to move the world towards something like global communism, right? Was there something that we missed? Let me know in the comment section down below. Just got to wait for a few minutes after the show ends. Be glad to take your comments. Now, following along from that, we got to ask, we got to talk about Ethereum. All right. We got to talk about Ethereum because a major trend is continuing to grow inside the world of Ethereum, and that is the popularity of stablecoins continuing to flock to the Ethereum chain. Right now, stablecoins obviously are digital tokens tied to the value of some stable asset that is oracleized or external to the blockchain or the entire cryptocurrency industry in general. Right now, Ethereum has become a haven for stablecoins over the last year. With over $5.6 billion worth of Tether USDT, now being issued on the Ethereum chain, compared to just $1.3 billion on Bitcoin's Omni network. There's only 800 million USDT on the Tron network. Unfortunately, well, it depends on where you sit on the topic, mate, fortunately or unfortunately, the issue being raised now, particularly in this article, is how does Ethereum's leading role in the stablecoin game, right, which is supporting on-chain assets such as Tether, USD Coin, Paxos, DAI, and more, how does this affect the long-term prospects to the underlying value of the native token of the Ethereum blockchain, ETH itself, right? How does this affect, ETH's value proposition moving forward? Now, on Monday, the Ethereum network took another step in embracing Tether. So the majority of stakeholders and investors utilizing Compound, which is one of the most popular platforms, dApps on Ethereum, voted in support of adding Tether to their protocol, which is, again, one of the leading DeFi protocols on Ethereum, right? Which is yet another sign that stablecoins and decentralized finance, to a large degree, have become core to Ethereum and potentially their entire value proposition, right? Now, the latest information coming from Masari suggests that stablecoins have become so relevant to Ethereum that the total value of transactions taking place on Ethereum, thanks to stablecoins, is beginning to rival that of the value transfer taking place on Bitcoin itself, despite the fact that Ethereum's market cap is only a fraction of Bitcoin's. Ryan Adams, founder of Mythos Capital, described the developing use case of Ethereum as, the reality that in February 2016, Ethereum was trading at $2, right? And 4 years later, if you were to tell you that the network would host over $9 billion, and that was just one of its use cases, you would have absolutely backed the truck up. Now, personally, that's how he feels about Ethereum's value proposition today. So obviously, quite an Ethereum bull right there. So while Adam's comments suggest that Ethereum investors are embracing this stablecoin use case as bolstering the underlying value of Ethereum, the opposite sentiment is also potentially true, and it's a growing one in the Ethereum community, right? According to one of Masari's own lead analysts, this is Ryan Watkins, the dominance of Tether and other stablecoins on the network poses a long-term threat to Ethereum. This is the ETH token, right? The ETH native token of the Ethereum blockchain poses a threat to Ethereum's own value, right? Because stablecoins continue to be the primary value transfer mechanism on the network, as opposed to ETH acting as a value transfer mechanism on the network, Ethereum's monetary premium, or its position as a potential form of money, may actually harm the value of the Ethereum token itself, as its sales pitch will return to what Ryan calls the naive early branding of digital oil, right? You don't actually need, you only need to hold a minimal amount of Ethereum or its value will trend towards stability, right? And the fact remains that, this falls into, when we kind of consider this problem or this concept in and of itself, we kind of have to look at, in this particular case, the critics who say that cryptocurrency is too volatile to be adopted are somewhat correct. And that's why this applies, right? If stablecoins are driving the dominant value transfer mechanism on the Ethereum network, why would you transfer value in something that is volatile, i.e. Ethereum, when everybody else, and it makes more sense to transfer value in a stable format in the form of USDT, right? Or Pi or DAI or Paxos or whatever is being held on the network, right? So again, this is a case of Ethereum potentially not being adopted if it continues down this route by its own high level of volatility, right? By introducing assets that have similar features, such as decentralization, rapid and low-cost global settlement, but also happen to be stable in their fiat-denominated values, this may hold more potential for mass adoptions than their volatile and speculative-driven counterparts here in the case of stablecoins on Ethereum, right? I've seen this in the realm of trading, right? It has become more convenient and attractive to me to trade altcoins against USDT than BTC, right? I've noticed that the USDT books have become thicker, and the knowledge that my value gained or lost is going to be stable is extremely helpful in building algorithmic strategies rather than trading against BTC, because now I have to run an entire secondary loop for my auto hedging strategy. And, you know, of course, the majority of the market is already doing this, right? You don't trade Bitcoin against XRP or Ethereum as quote pairs. That would be kind of silly. You trade it against USD. So the majority of the market is already trading the main traded asset, Bitcoin, against something that is stable, which is USD, right? Whether in terms for spot trading or in synthetic cases for derivatives or futures contracts, right? Now, the defining characteristic in my mind, however, and what separates Bitcoin is its unconfiscatable aspect and the security of the underlying Bitcoin network. Not to mention its monetary policy and economics, also highlighted as a better form of money for the long term for adoption as hard currency, right? We just have to be aware, you know, this is kind of a PSA. It will take time and effort and adoption to smooth Bitcoin's price out. It needs to see a massive increase in demand, which means a massive increase of adoption, right? It's something interesting for us to contemplate and consider while we're cruising toward the moon on rocket fuel, right? But I guess just to state all this, right, you don't have to feel like a crypto heretic if you find yourself utilizing USDT more for trading purposes or for value transfer purposes, right? You have to brand yourself a crypto heretic. And you can also, in my opinion, ignore those, because at different points in time, those who are successful will adopt the tool that gets the job done and makes the most sense in the moment, right? Meanwhile, your underlying ethics and philosophy and drive will continue to improve Bitcoin and its promotion as adoption for the world as sound money. So, let me know what you guys think in the comment section down below. Is stablecoins just a fad on the Ethereum blockchain, or is Ethereum strongly trending toward a stablecoin based blockchain, right? Essentially, right? Now, is this good or bad for the value of the underlying ETH native token, right? Is this a bullish case? Do you agree with the bullish case, or do you agree with the bearish case, right? So let me know if you guys have any questions about that. Leave them in the comment section down below or sound off in the live chat. With that being said, last thing that I want to mention is an update on the Dforce story, which we covered, right? Dforce refunds users after recovering assets from the $25 million hack. Now, we've covered this pretty extensively. So if you guys are just tuning in and not really aware, there was a large breach of the Dforce Foundation. Many millions of dollars were stolen in their native tokens and other stable coins in Ethereum. And the hacker wasn't particularly very good at computer security, right? Well, let's just say that he didn't use Tor. He just used a VPN. His IP was fairly easy to trace. He was traced. He ended up returning the funds very quickly. And you know, maybe I don't know. He might be lying upside down somewhere. But having said that, right? Dforce has recovered a good portion of the funds. Some was lost due to friction on transferences, but refunding users after recovering from assets. And kind of the difference between this and the other protocol that we covered was that on the other protocol that we covered, on the other decentralized finance protocol that we covered, there was no user funds at risk. With the Dforce, there was, right? Users lost their funds on deposit. So they are attempting to make them whole. Over 90% of assets have been distributed to users in less than 24 hours. 100% of users have been made whole in the recovery, it says here. So, you know, sometimes hacks can actually be a good thing, right? Highlight inefficiencies in the network and be a strong warning case that if you're going to be good at exploiting a blockchain, you also better be good at hiding your digital footprints, lest you be caught. So let me know what you guys think about that. If you guys are interested in hearing the more breadth and depth of the story, please check out our Breaking Bitcoin Bits playlist, where we do cover this in full depth, as we have on previous episodes. All right, with that being said, let's get to the main scene. OPSEC, huh? All right, let me find my mouse here. I know it's somewhere around here. Okay, here we go. All right, Bitcoin on the daily. Keeping it nice and simple, let's take everything off. We'll just simply look at the baseline. Where is price at? We currently have BTC USD on ByBit on the daily time frame. All right, we're good. BTC USD on the daily time frame trading at 77.27. Did I get that right? 77.27, certainly correct. Now, I still maintain my long exposure. We are above the baseline. The baseline is our trend directional indicator. So overall, the current directional trend is to the upside. The baseline itself does rest down at 73.16. So to revert the trend, we would need about a $400 movement to the downside and a daily close to confirm that, right? Not merely a move down or a dip. A dip down to the baseline I would view as a buying opportunity for recontinuation longs once I got a reversal within the trend indication from one of my technical indicators. In this particular situation, the overall directional trend is bullish, and we can see this on all subsequent dips back down to the baseline. This was the reversal baseline bounce that we took. This is where we got chopped up a little bit and then resuming the bullish trend to the upside, right? So price is not bearish until we close below 73.16. A lot of individual analysts are calling for a reversal, but of course they always are. Every time Bitcoin's price has moved up and stalls out or moves down and stalls out, everybody always screams and shouts for a significant reversal and 3K or 10K, either way, either direction. That is a foolish way to trade, in my opinion. You simply trade in the direction of the trend as your prima facie, as your initiating force, as your primary foundational method of trading, right? It's your primary foundation to trading. Very simply here. So the directional trend is to the upside. Optimum entry level for continuation longs would be between the entry qualifier and the baseline itself, between 76.91 and 73.16. You are not doing it right if you don't have any haters, says Mr. Ether. Quote the Raven nevermore. All right. So overall directional bias is to the upside. Overall directional bias is to the upside. Things are looking good. The only thing here that is slightly concerning is the MINX, which is our momentum oscillator. It's sensitive, has given us the cross under and the take profit long signal going back on Sunday. And we talked about that, how I do want to see how the week progresses as we move forward, right? How the week progresses as we move forward. And I don't see strong confirmation of that yet. We haven't gotten a sharp sell-off. We haven't gotten a sharp dip. Of course, MINX would be quite correct if it nails it here, and it often is correct. The only reason why we are, being cautious with that is because that signal did occur on a weekend. And with a strong directional trend, we want to be kind of careful about exiting our positions. Jack has a space bunk reserved next to Vitalik on the moon base. Yes. Good stuff. Parallax is still Parallax is still bullish. This is our trend directional indicator monitoring the divergence between the relative strength index and the commodity channel index. This is still positive. It is not indicating for a trend reversal. It would need to cross and close below zero. It is angling down. However, it does need to move down about 50 more ticks, 51.7 more ticks, and actually move into the negative territory to be signaling for shorts. And this is a great and fantastic way to trade because you simply trade in the direction of the trend as it asserts itself. In addition, Watt-Atar explosion is still showing a rising explosion level, meaning that the Bollinger Bands are separating. That is, volatility is increasing following a level of contraction. And so we would expect volatile movements in the direction of the overall trend. Your probability to get more profitable trades or for price to move farther are increased if volatility is increasing. And we do see positive volume delta from Watt-Atar explosion. So no big negative sells have come in yet. Nothing to really switch our directional bias to the short side here. Overall, overall a bullish chart, neutral as far as continuations go. There are no objective technical indications for entries at these particular levels. Neither are there for exits. We'll take a look at the optimized MINX exits. They are not firing in this current range. And for my own personal edification, I will be managing risk with a daily close below 75.54 should that occur, which is moving up to lock in profits for me. And we'll look at our EMAs when we get over to our classical TA, which has been requested. Now we are about 15 days away from the halvening. Estimated to occur right here on the 13th of May 2020. Last time I checked Bitcoin at block half. Looking at Ethereum on the daily, getting some more contrary. Now, I didn't have long exposure to Ethereum. I did not have long exposure to Ethereum, just on Bitcoin, because the charts were different, right? The charts were different. Ethereum was overperforming Bitcoin on this movement to the upside, and it is overperformed it a little bit on the way to the downside. So the charts on Ethereum are looking more bearish, and whether you want to play kind of a correlating factor, a correlating causation, and look at this as a leading indicator, and the reason why I don't do that is because it would just be as easy to look at Bitcoin and use that as a leading indicator and say, well, because Bitcoin is more bullish in this case, I expect Ethereum to be bullish, and I don't look at the actual objective signals from Ethereum. I think that is the incorrect way to trade. Trading correlation, because it's too subjective. There are certain technical ways to do such a thing, and you can derive strategies around anything that you like, and you can follow through with proper methodology and proper strategy construction. But in the case of Ethereum, and in my personal case, I trade each chart independently, and I have good success and good results with that. So that's simply what I do because it works. But for Ethereum, the overall directional bias is still to the upside here. Price is trading at 195.85 here on ByBit, the derivatives. The daily baseline is sitting at 181.23, so a daily close below 181.23 is going to be sending us into a bearish trend, but we're not there yet. We're nowhere near that yet. Neither are we in kind of the optimum entry zone looking for continuation longs, which would be between 193 and 181, in between the entry qualifier and the baseline itself. So we're not quite there yet. Nothing really to do at this point in time. If I were to have long exposure, I would be managing risk below 190.22. That hasn't happened yet. A close below that level would send me in a no trade zone, or looking for reversals within the trend type setups like reversal baseline bounces, or something like Minx crossovers while we're in that entry qualifier, which would be a continuation long in and of itself, a continuation long signal. All right, looking at our indicators, Minx has also crossed under as well, giving us an exit signal following a TPL back over here. We can see that we do have a rising explosion level, but it's gotten a little choppy over the last few days, and Parallax is still bullish as well. So to me, the trend on Ethereum is bullish, but there's no technical indications to enter. And due to the Minx crossover, we should be out at this time because that did occur on a Monday. So I'm going to have more confidence in that signal than the preceding signal from Bitcoin, as this did occur on a full volume trading day. Overall volume relatively low. And, this is the moment where traders start getting a little edgy. So my recommendation is don't get edgy. Trust in your initial position. It's either going to be right or wrong. And if you are managing your risk correctly, the end result of the trade is going to be the same as every other dozens or hundreds of thousands of trades you've taken before, right? It doesn't matter if the market starts going a little sideways. There's no amount of analysis that you can do to predict in which way it's going to go. It simply doesn't exist. You trade your strategy very carefully and consistently and patiently across time and space, and you return consistent profit. Okay, so dailies are neutral on both Bitcoin. Overall daily trend is bullish on both Bitcoin and Ethereum. Current price volatility is not really indicating for any trades to be taken on the higher time frames. Going down to the 2-hour time frame where the Cybot is running, we have not gotten any new signals on the 2-hour nor on the 4-hour right now. And this is the bot that we implemented previously. Coming down here to the lower time frames, and we'll take a look at the ISIS-Spot. ISIS-Spot running on the 45-minute chart has not generated any new signals in a while. Last short it recommended to take over here, and that would have been a take profit. That was a very nice dump that it caught, and really nothing to do here yesterday. Now, going back to what I had said yesterday, here's where we were trading yesterday, and we did get a pretty... this is where we were trading yesterday. All right, so let's go back and look. This would have been around when we were monitoring price yesterday. And we didn't really end up getting that big breakout that we saw. We did end up coming back up and trading back above yesterday's point of control. Yeah, so we did end up coming back up and trading above yesterday's point of control, and we did get some appreciation to the upside upon doing that. But only about 1% of price movement before coming back down, back testing, and now we're back to consolidating, back at the point of control. This does, on its face, look more bullish than bearish to me, looking at the way that it's consolidated. But we can see that the ISA spot, as well as Minx, Minx itself, is just oscillating right around the median here. We are seeing reversion to mean strategies essentially being deployed and being utilized here, and we don't have really that strong impetus for trending strategies. As long as price is trending above today's point of control, I would look for bullish price appreciation, and roughly the same kind of analysis from yesterday stands, right? Yesterday, I was worried about price closing below 76.50, 76.40. If price were to close below 76.40, I don't really feel that these levels are going to act as strong support, indicating downside targets to me of 73.71 and overall kind of a final resting spot between 72.35 and 71.38, which would be congruent with a return to the baseline, be wicking slightly underneath it. So that can help us give a little bit more accuracy. Of course, price pushing up above, we really need to break. The range to break right now is going to be around 77.50. Let's call it 77.60 to be nice and safe. If we can get an hourly closing above that level, we will most likely see acceleration, because we're getting to the point where we can actually get a nice push of volume and volatility to move us where we want to be. Okay. It's ICYS as in IC Systems. All right, looking at CME futures. Can't have a conversation about the CME futures without pointing out the big gap to the downside, 82.80 to 90.60. And this is another reason. This is just a little bit more confluence why I talked about the acceleration, right? The acceleration level, 8,000 to 8,200 is a level of resistance, right? And we can see this as indicated by my volume profile analysis. So here is the weekly time frame. Here's my volume profile analysis. We can see here that the lower band of the red box territory begins at 8,000. And this is actually, so this whole red box is a box of acceptance, right? So broaching the lower boundary of the red box, in this case, 8,000, 8,200, gives us acceptance into the box. And not only are we going to accelerate through this because this is a low volume node, relative to the high volume nodes. But also there's that gap. And my experience with trading gaps is that price often cleaves through those gaps like a hot knife through butter and tests the other boundary. Like, it doesn't just come into the beginning of it. If you get acceptance into that range, then you will often accelerate. You kind of open up the floodgates to investors and speculators who are like, oh, price is bullish now. We've gone into a new range. Let's fill the other side of the range. And that's what happens. And you're allowed to establish a new level of resistance on the other side. Good to see you, Scrooge McDuck. Thank you so much, my friend. Strength and profit to you as well. You guys are going to get us demonetized. Talking about. All right. Anyways, coming in on the CME. Overall price is looking pretty good. 74.85 is going to be our invalidation level. And we do have our baseline. Baseline all the way down at 65.70. So I would argue that the CME chart is actually quite far more bullish than the spot chart at this point in time. Minx is going to be signaling for a take profit long on today's daily close on the CME chart. All right, looking at the broader market. Let's refresh crypto bubbles and see what we have today. We're looking at daily performance trading against the dollar. Overall, good day for the altcoin markets as well. Lisk up 13.5%, XLM up 10.7%, Link up 4.2%, Digitex futures up 10%, XRP up 5.9%. Let's see here. Lend, big performer, HYN, not really even sure what this one is. Hyperion. Steam down today, Digibyte down today, Hive down today, and MadeSafe token down today, which were kind of movers yesterday. So getting sold into, these pumps are not really sustaining and lasting as long. Tezos, Mana as well. Overall, good day for altcoin exposure, good day for altcoin portfolios. So congratulations to those holding those coins or taking those trades. We went over the volume profile analysis as per usual. Let's see, what do we got here? Overall, traditional markets are having a bit of a sell-off and working on climbing their way back up. But we have had a pretty volatile sell-off today. The market's gapping pretty negatively today and moving to the downside as VIX is rising. The euro dollar taking a massive hit. Gold spot and silver climbing their way back up, showing more strength. And this is why I actually feel this is a fairly positive. It just depends on what Bitcoin decides to move with, if it decides to move with the traditional markets or if it decides to move with the gold and silver. But gold and silver having a pretty good rally as we move to the upside, or attempting to get into a rally, because gold and silver had already sold off, which leads me, if we kind of look at what gold and silver did over the last few days, having a pretty extensive sell-off and then bouncing back up, forming a double bottom, and now trying to push back above resistance. Like, for example, if we look at gold spot, trying to get above 1713. If we look at silver spot, trying to get back above 1520, which is where we want, so we can run back up to about 1545, maybe even higher to 16, and similar for gold, trying to get our way back up to 1750 to retest our previous resistance there. Whereas, so if we look at that as a kind of leading indicator of what the S&P will do, you can see this, dramatic sell-off in the S&P as well as the NASDAQ and the Dow, and then looking to form that initial rally, come back, form a double bottom, and then attempt to try to climb back up and push above that resistance level. And notice again that VIX is rising for the first time in almost a week. So back down to basically where we started on both the SPY and the Dow, the NASDAQ getting hit the hardest, and the Dixie continues to be hit, which is pretty interesting. So this is not even a flight. Normally you would see the Dixie ramp up as traditional markets sold off, but traditional flight into other foreign currencies as well. Oil putting in a bit of a doji on the daily, kind of saying, I don't really want to be sold down no more. That's a flight into bonds. We can see T-bonds picking up the slack. But overall, if we zoom out and look at the daily, not great days for any of the markets today. So what's interesting here is that Bitcoin holding pretty stable in the face of some pretty dramatic moves. I mean, nothing really to call home to mom about, but, some pretty negative moves across the rest of the market, the broader market. And we'll cover classical technical analysis by request. I've added this stochastic for fun. But anyways, looking at classical technical analysis, right? Your bread and butter, anything that anybody can do. We've got a fast and slow moving average cross here, EMA small cross. This is bullish. This would be bullish until price closes below the EMA, which is kind of like your last stop, get out of the trade, sitting down at 74.75, which has some nice confluence there with the baseline and the continuation filter. RSI is in the bullish control zone, not nearing overbought levels. MACD is actually quite healthy with rising bullish not rising bullish divergence, but rising bullish. The histogram is rising, so I always call that delta, but you can call it whatever you like, with a rising MACD. OBV is overall rising. We have our first kind of dip down in the OBV today, but no crossover from the Stokes, which are in OB territory, but I don't really pay attention to Stokes being OBOOS. So this is a fairly neutral chart with a bullish bias. All right. Can I make the RSI line brighter? Certainly, my brother. How about that? Look good? I'll make it fatter too. For the more traditional. All right, so we've got about 10 minutes. We've got about 10 minutes left in the show, guys. Let's go over to our regular charts and see what you guys have in the form of questions today. There we go. And while I'm doing that, let's make sure to show some love to the D-Lives. 24 of you guys over here today. My goodness. Matt, Cam, and 4 others. Thank you guys for the follows over there on D-Live. Highly appreciated. Let's get bullish in there. Let's put 100 lemons in this chest. Let's distribute these rewards. Rhino, Mr. Ether, thank you guys so much for the lemons. Highly appreciated, my friends. Double the lemons, double the fun. All right. Damian Hughes, Cardano. Cardano is signaling a take profit long on this candle. I actually ended up taking profit on the previous candle. And what I do really like about Minx is often how it signals for TPL on an up candle, which is nice, as well as the CL or the TPL. However, having said that, again, Minx has gotten quite overextended on this, but just now signaling for the TPL. ADA USDT was actually a trade that we just closed out. We took the trade on the cross on the continuation long back above the continuation filter here. Price moved all the way up, so capturing almost the entirety meet of this movement, taking initial profit on this candle, and then riding and closing at close yesterday. So very happy with that Cardano ADA USDT trade. Congratulations to all the people in premium who caught that movement. For myself, I don't really have any opinion on ADA USDT right now. I feel, of course, price can continue to move up, but my system is indicating that taking profit is warranted here. So that's exactly what I've done, and I'll wait for price to move down and give me another objective signal to take action with ADA USDT. But quite a move out of ADA USDT. I really like that. Challenged investor asking for SLX and UCO. All right, so let's look at steel. Steel is actually looking pretty healthy, actually giving a continuation long signal on today's daily candle. Let's see here. 1, 2, 3 at 1/3 risk, though, at 1/3 risk, because it did take some time. It did take some time to get It did take some time to get. Why is this signaling for short when it should not? Below the baseline. You should not be doing that. Oh. Error. Filtration. All right. Yeah, utilizing just Minx, could have got in on this continuation right here, and you'd be in a profitable position. As far as utilizing Parallax, which is more sensitive, not more sensitive, less sensitive, really wanting to see an established trend flip on something like the daily, it is just now giving a signal at one-third risk, invalidation on daily close below 22.29. Now, in the realm of chart formations, I do kind of like this, obviously the initial low formed by the March meltdown, and then, nice trend to the upside, higher low, and pushing back at resistance. This is a riskier play, which is, again, why I like how the system is also signaling for one-third risk on this trade. Probably not one that I will end up taking. I've got my eye on a few other things. But it's a valid continuation long signal with rising volatility, as we can see here. So we do have the Bollinger Band separating. Parallax has just flipped bullish, which has been far rarer over this ETF's history. And this ETF actually is not just trending to the downside, like many ETFs that we've looked at have. This ETF actually has this is like a nice macro double bottom and higher low. You're talking about this day right here on the 23rd. Yep, today would be your first take profit. About 5%, almost 5%. So I'd take a little profit, move that stop loss to break even, and then wait. If price comes down and tags your stop loss, you've made some money, and you wait for the next movement to the upside. Looking at well, interestingly enough, reversal Minx is signaling for longs right here, which is pretty neat. I would like to see a daily close above 1502. Man, really volatile on the UCO. Okay. Yeah, you got the reversal signals coming in here and here. Yeah, the initial one right here, calling for this. Actually, the continuation short would have been right here. Yeah, right where it indicates due to Parallax confirmation. So that's the continuation. And you are getting exit signals for shorts certainly right now. You're getting exit signals for shorts certainly right now, and reversal indications to go long. Now, trend confirmation would be if we can close above 1502. Would be good to see. Do have Parallax listing up and recovering from almost oversold conditions, which would be neat. Had a big volatile movement, so watt is not a whole lot of help here. Minx also giving the reversal signal right here. Yep. And then a little bit more smoothed out right here. This is a riskier long. But certainly the reversal signals, I would like to see price close above 1502. $14.94. Sorry, $14.94. Just checking the Fed's website to see if they've announced anything new to the docket. Okay, so listen. I mean, there's a couple things that can happen at the at the meeting. Check the meeting schedule. Yeah. Oh crap! It's the fuzz, man. There's a couple things that can happen, right? So I mean, obviously, the mainstream media is going to say that what investors are watching for is, does Powell expect a bounce, as he said earlier, in the last half of the annual business season, and it's not going to happen, right? That's not going to happen. Now I don't know what sentiment he will express tomorrow. If he is, if he's dovish, then I expect the market. I mean, the markets are pretty tenuous right now, right? So when we look at traditional, and just the same as with Bitcoin, right? Things are getting a little twitchy, right? So I think that's why that's why everybody's getting a little antsy, a little nervous, right? It always gets like this, right? After prices made a movement and then it just kind of stalls and hangs out, people are like, oh, what do we do now? Because the people who missed the movement are trying to either get in on a reversal or get in on the continuation. And people who got in on the movement are wondering whether they should take profit or hold on or exit, right? So I don't really know. I think certainly, I mean, you could wait till tomorrow, but I think certainly a potentially a prudent move would be take positions on things that either you should not be in, and it wouldn't hurt to like close things out or tighten up your stops. I mean, either way is possible. That way you're not on the wrong side of the movement. This is the same way that we teach about trading with FOREX, right? Setting fundamental positions and not trading against strong fundamentals. And there's nothing really more fundamental that moves the market than the FOMC meeting. So just watch closely, right? This is not the style that we trade is not responding to the news events, right? We just play the raw technicals, just being aware that we can have some adverse volatility. So I don't have a lot of ETF exposure right now. I'll take the signals that signal objectively. Overall, my expectation is that he's going to have a positive sentiment, but mostly just repeat himself, right? They have already decided that they're going to keep interest rates near zero until they're certain of an economic recovery. They're not going to turn interest rates negative. They've already said that they're not going to do that. So if he says negative, it's like, so things that like out of the woods events, like negative interest rates would be crazy. Not going to happen, but that would be crazy. I would expect some negative sell pressure, some extreme negative sell pressure. And if he expresses some, like really dovish sentiment that the Fed is concerned, or I doubt that he's going to do that. But we'll see. We'll see. Certainly be safe out there, man. I expect that it's my expectation is that it's going to be kind of a nothing. My expectation. Now, if he comes out, because I don't really think it's going to matter. I think that my general sentiment of the market is that it's relatively bullish right now. And I want to see the trend flip back to the downside for us to get that negative movement. I don't think that we're going to get a massive, I don't think we're going to see a massive like 5, 10, 20% death candle out of traditional markets. I think that the second slump is going to be, if we have a second slump, is going to be far more less. It's going to be less steep of a curve, right? Which it almost always is. All right. With that being said, guys, it is now 1:04. So I got to get back to work. A lot of coding to do. And I got to prepare for tomorrow's community mentoring session with my team. We're going to be covering a whole lot. Look forward to you guys being there. With that being said, let's head back to the main scene and talk about some cool stuff. All right. I want to thank you guys for joining me for another episode of Breaking Bitcoin Market Analysis, brought to you by the Cracking Cryptocurrency Premium Trading Group. And of course, there's never been a better time to sign up and start building your own verifiable technical strategy. Take advantage of all of our resources. Find out more information. There is a link down in the description, or point your browsers, mobile devices, or Ravens to premium.crackingcryptocurrency.com. It takes a whole lot of time to load pages utilizing a Raven, but you can get it done. You can get it done. We've optimized that SSL very, very efficiently. All right. If you guys have any questions, comments, concerns, sarcastic remarks, or death threats, leave them in the comments section down below, and I'll try to respond personally to them within the next 24 to 48 hours. Thank you guys again for coming out. It's been an incredible show. We covered so much today. Overall analysis of the market is fairly neutral. Not a whole lot happening today. Excitement in the FX world. We didn't really cover FX too much today, but we'll be covering that in our analysis and in our summary of the market tonight. What is the maximum airspeed of a latent Raven? 42 Satoshis. Another news. We're going to be covering so much tomorrow, guys. Make sure to stay tuned. We're going to be releasing the interview that I had with John Ehlers this week. And we're going to be I'm going to be working on automation a whole lot this week. So a lot to look forward to as a premium member. And I'll see you guys in the Discord. So we are here every day at 12 p.m. Central Standard Time. So that's when I will be back tomorrow at 12 p.m. Central Standard Time to break down the markets, break down the news, and give you guys the best analysis that I can on the next episode of Breaking Bitcoin. Until then, stay safe, be good, and trade safely.